So I just got back from walking with Jenny and the kids. Um, I have to go because we're going to feed them dinner and bath time and all that stuff. But I'll be on later. I could even do a live stream tonight. I just wanted to really quickly show you I got into this scalp on BTC, or on ETH rather. It's risky getting into trades now. So if you're not qualified to trade with more advanced, riskier types of trades, it's better just to stay out. If we start pumping and we get back above maybe this last dip to like above 216, then we get enough confirmation that this is probably a big bounce and get back in, and maybe we're going to go all the way back up to the prior highs. But trying to get in now is it's so risky. If you're getting in with a really small amount, okay, if you're comfortable risking it, fine. If you put, a couple $100 into a trade and you're risking 1%, 2%, 3% at the most, and you're comfortable with losing 5, 10, 15, $20, then fine, go ahead and do it. But just be prepared to take the loss, right? So I'm expecting that there's a very real possibility we can dump and I could take the loss here. I also think there's a very good possibility I'll make a lot of money on this trade. So I'm in the trade because the odds are worth it for me, right? It's the risk-reward ratio is worth it because I'm not risking that much. I'm risking a couple $100, but I'll make several $1,000s if we push up much higher. So that's what I'm doing with Ethereum. Same thing goes for BTC. If you're trying to catch this dip on BTC, you could theoretically buy right now. Just be prepared to accept the loss. And if you're willing to accept that potential loss, then you're good to go. If you were to buy in on BTC right now and set your SL below the prior bottom, you're only risking 0.75%, maybe even less, maybe 0.6%. So you're not going to take a very big loss if it stops you out. But if it does break out, you could potentially make a lot of money with a 3 or 4 or 5% move if it goes back up to close that 9,000 and change CME gap, which is still there, I believe. So ton of potential here, very high RR scenario. It's just risky, and you have to be willing to accept that loss. If you're not good with risk management, it's probably not the best idea to try to get into this stuff. Now, something I will say, there are a couple interesting things here. We have sort of an ascending triangle forming, but not really, just a little bit. We have a double top, which is bearish until we retest it again. If we consider that a strong resistance and we develop a little bit of a trend here, maybe come up, come down, test that low again, we could start a nice trend. That actually could give us an ascending triangle. We're also seeing, if you look at the Stoke models, on the 15-minute, we're still coming down on BTC, so we're not ready for a reversal yet, but ETH already got that reversal. We're starting to turn up, which looks really good. The 5-minute had confluence as well, so when I got in, the 5-minute just bottomed out, started to reverse. Now the 15-minute is reversing. The key here is going to be the next reversal down on the 5-minute can't come down like these have come down. So before, we were going up a lot and down a little, up a lot, down a little, and that was an uptrend. Now we're going down a lot with each Stoke reset, right? Up a tiny bit with each Stoke bounce, down a lot with each Stoke reset. That's forming a downtrend. So right now, the 5-minute is getting pretty high. It's pretty close. Only 1 or 2 more candles, it's going to reverse and come back down. When that happens, if it comes down more than it went up, that's going to be a downtrend. The only saving grace in this particular case is the 15-minute has been pretty stable, predicting upward moves. So here, it went up 1.8%. Before that was a much, much bigger move, that 15-minute push, right, from bottom down here up to the top. Well, I guess that was really more of an extended run, but still, you get the point. Over here, bottom to the top, 1.5% at least. So we just started bouncing. We're only 0.6%, so we can get quite a bit more up on this move. I'm not sure if this is going to be sustainable to give us a new local high. I don't see it because we're dumping pretty hard, and we still have an incredible amount of bearish indicators going here, right? The hourly is still pretty high with the Stoke, but again, when the Stoke starts zigzagging like this and not giving us a constant predictable pattern, you can't really use it. So the lower time frames, it's still useful because it's been pretty predictable. The higher time frames, it's either not predictable or it's just extremely bearish. So if you look at Bitcoin, for instance, we looked at this last night in the live stream. We have very, very strong bearish indicators on the Stoke models on the 4-hour and the daily. The daily too is turned down, and this looks extraordinarily bearish. It's just crossing over now and starting to reverse. So it makes total sense to get one more push to get close to 90. Higher or to the low 9s, 9,000, maybe 9,100. If that were to happen, it would work out perfectly because we would end up getting one little push up on this candle, and then the next daily candle, or this is the daily. That's in an hour and a half. This candle closes, so that's going to be a big deal. When this daily closes, it could dump. So I would watch in an hour and 20 minutes. It's very possible we can dump really hard if we can just push up a little higher. maybe close that CME gap. Again, I think it was a little over 9K. I have to double check. And then we come back down. That might be the opportunity to short. That next daily candle could be the short opportunity, because if you look again at the Stoke model, we're getting pretty close to that big sell-off. And then for those who didn't see the stream last night, if you look at the weekly is getting up there too. So another couple days, another 2 to 5 days, could give us enough to close this out and start that dump. And on the weekly, when we max out and reverse from this overbought level on the Stoke, we get one hell of a dump. This was the last one. The last one was from February, and that was a 60% dump. That's why I said it's very possible we could see a 60% dump, because we have confluence matching Stokes with the weekly, the daily, and the 4-hour, the three major, larger, higher time frame ones that matter the most. So looking at the shorter time frame, I got the scalp going. Higher time frame, we're looking at a really big dump once we get to that point. We're just not exactly there yet. We might have one final push up, but it's extremely dangerous to try to long this thing right now, because we are on the cusp of a big correction, in my opinion. If we were to blow through the prior top and just pump 5-10% more, then yes, that's invalidating the bearish scenario, and it's entirely possible we can continue in a really big bull run up for several days. I think the probability of that happening is less than 1%, to be honest. I would say that's honestly under 1% probability. So I wouldn't bet on that. Betting on it is irresponsible, and you're just going to be wasting your capital. If you want to play this safe and play it right, get into some small short-term trades if you know how to do it and you know how to manage the risk. And if you don't, stay the hell out. Wait until things settle down and we have a more concrete answer as to where we're going. Then you can get into some potential trades and make some money. But until then, stay on the sidelines. And remember my past strategy, PASS, personal asset short selling. If you're in a trade, or if you're not in a trade and you stay out, you can mimic the effects of shorting. Shorting is betting that the price will go down. So instead of borrowing coins from an exchange to short, if you have $10,000 worth of Bitcoin and you sell it right now and the price of Bitcoin goes down, so your $10,000 worth of Bitcoin is now worth $9,800. Now you could buy it back for $9,800 once the price drops, and you have $200 left over, right? Same as shorting, except instead of shorting, you're short selling your own personal assets. You're selling those assets, pass, and you're buying them back at a lower price, getting the exact same benefit that I'll get when I actually short it, and you're not taking on the additional risk of margin trading with leverage, which opens you up to all sorts of risk that I broke down in some of the other live streams I've done, which are in Flux University if you want to look into margin and leverage trading videos. That's that. That's where we currently stand. Stay tuned for updates. I'm going to hop back on in an hour when we're getting close to that daily candle closing. But other than that, I'm going to be busy with the kids. So I'll see you in an hour. And other than that, I'll be pretty busy for a little while. So I will talk to you. Tag me in the group if you need me, and I'll try to respond. But until the kids go to bed, I won't be as available. Thanks.